All right, ladies and gentlemen, we are coming live from our Joburg office. Good morning and welcome back to the opening bell with myself, Tshepo and Ashley. And this is brought to you by TD Markets and TD Markets Academy every Mondays to Fridays at 9, streaming live on YouTube. I trust everyone had a good weekend. Now we're back to business. All right, so this morning we are starting the month of May, came out at 172,000 from a forecast of 85,000 to 100,000, right? And then you look at the unemployment rate, which came out at 4.3%, right, from the forecast of 4.3%. The headline takeaway is that the U.S. labor market remains resilient despite the ongoing U.S.-Iran conflict, elevated oil prices, and broader geopolitical uncertainty, all right? So what does this mean for the market, or what is the effect on Friday? On Friday, we saw a stronger dollar, which put pressure on gold. So dollar went up, gold went down, all right? So with regards to the dollar, a strong jobs report, what it does is that it reduces the urgency for the Fed to cut rates, all right? That's what it does. So if the dollar continues to strengthen, it's going to reduce the urgency for the Fed to cut rates. And then you look at gold, which was bearish, right? It struggled because treasury yields rose, the dollar strengthened, and rate cut expectations are now pushed back, right? It makes sense from the previous point of a stronger dollar, which reduces the urgency. So rate cut expectations are now going to be more likely to be pushed back, all right? So if markets focus on strong payrolls number, gold could face selling pressure. It could continue to face selling pressure. And this is what we're seeing right now, this morning, right? Gold continued to go down. It ended the week bearish, and now it continues to go down. And then we had crypto and Bitcoin, which was mixed, right? Crypto generally prefers lower interest rates, weaker dollar, and more liquidity. So where Bitcoin is right now, we can see that it rallied up a little bit. Maybe let me go to the Bitcoin chart, all right? Bitcoin rallied up a little bit from this low of 60,000, all right? And this is where the liquidity is in the market, okay? So when it comes to crypto, we have to also talk about the liquidity heat map. We have to see the inflows and the outflows of the ETF, which is something we can look at a little bit later on. But on Friday, the initial reaction on crypto was a little bit mixed, even though it is initially bearish, all right? And remember, it favors lower interest rates and a weaker dollar, all right? A stronger jobs report may cause traders to reduce expectation of Fed easing, which can weigh on Bitcoin in the short term. And then you had US equities, all right, which was mixed. So we're not gonna really talk much about that. It was mixed. They didn't really give us a solid case to work from, all right. And then what came into the conversation was the dollar rand, right? The dollar rand, which initially pushed up even before the report came out. So what happens if you take a look at the movement of the rand since the previous week, you will then see that the market priced in a stronger jobs data before the jobs report came out. As a result, the market, by virtue of them what's this word? By virtue of them pricing in a good strong a strong US jobs report, price pushed up. So this is what generally tends to happen at times, where before something happens in the market will price it in, and then the market will move before it happens. And then when it happens, it just accelerates that movement, right? It adds on to that movement. So a stronger US economy, a strong dollar, right? It often pulls capital towards US assets. That tends to put pressure on emerging market currencies, including the rand. The rand is an emerging market currency. So a stronger US economy, a stronger dollar, which pulls capital towards US assets, tends to put pressure on the rand, as an example. All right. So now, that is the report of of the non-farm payroll. All right. So since we spoke about gold, let's have a look at what gold did. Right. Gold initially pushed down. And we can see the start of this week it is a little bit bearish, right? Since the first few hours of the day, it is still initially bearish. So that 4,100 mark, right? That $4,100, it could be a magnet, right? It could attract price. It could attract traders back down to this low because according to the previous reaction, there's a lot of liquidity around the zone. All right. So looking at the overall structure here, we could easily see it coming back down here before it push up. I mean, from this point on, anybody looking for buys here would want to wait for price to come back to the zone, right? To catch the buys. Anybody looking for buys. I mean, I'm not saying where the market is, there could not be buys, but what I'm saying is buys around the zone could give you a higher probability setup, number one. Number two, it could give you a favorable risk to reward ratio, right? So I would favor buys from around the zone than where the market is, but we will see. All right. So now this is what gold and how gold is looking down here, right? So that 4100, looking at the overall structure, this is where liquidity is at the moment, right, around the zone. So price tends to be attracted back to either a demand or a supply zone. All right. So from this demand here, right, we could see price being attracted back to the demand, grab some liquidity, and then push towards the upside. That is the scenario we have on this, right? So for me personally, I would favor buys from here. I would favor buys from here, not necessarily where the market is. I would favor buys from here, right? For the sake of a good risk to reward ratio, number one. Number two, for the sake of trying to catch not the whole move, but the majority of that move. All right. So that is gold. So now, start of the brand new week. What are we looking at? What are we focusing on? Well, at the moment, we can see the rand, the dollar is still a bit stronger, right? To kickstart the week, it's still a bit stronger. So what is the focus for this week? The jobs report has effectively shifted attention back to inflation data. This coming Wednesday, we've got the CPI report, right? The US CPI report, which is another important report, and we will talk more about it. But we are going to go live on YouTube at 2 p.m. on Wednesday, and we're going to talk about the CPI. But there's going to be an important conversation this week. All prices are going to be, they're going to continue, being the conversation. Developments in the Middle East, as well as any Fed Reserve communication. All right. So the question is no longer, is the labor market weakening? The question now is, can inflation come down enough for the Fed to cut rates despite a labor market that is still creating jobs at a healthy pace? Let me repeat that. The question now is no longer, is the labor market weakening? That's no longer the question. The question now is, can inflation, looking at the NFP report, right, not only this previous one, but for the past 2 months, can inflation come down enough for the Fed to cut rates despite a labor market that is still creating jobs at a healthy pace? That is the question. So we will then have an answer to that question on Wednesday after the CPI. All right. So for the start of the week, we are looking at a stronger dollar. We are looking at gold being under pressure, right? We are looking at USD ZAR. Gold is under pressure, as I said. We're looking at USD ZAR continue pushing towards the upside. The rand is under pressure. We are looking at treasury yields, which are pushing higher, or higher treasury yields. And we are looking at Bitcoin being a bit volatile, but the initial momentum is still bearish, right? So when it comes to Bitcoin, guys, we need to be careful about this 60,000 mark. We need to be careful here, right? Anybody holding shorts on Bitcoin, just be aware of this zone. That's a very strong reaction, which could attract buyers into the market. All right. So yeah, so that is basically to kickstart the week. And ladies and gentlemen, I think there are still a lot of opportunities, and yeah. So let's see what is going to happen. All right. So gold, USD, ZAR, Bitcoin, and lastly, let's have a look at oil, because oil was also mixed. All right. However, the immediate formation on oil, right, is that we could see oil railing up to $95 per barrel, $95 per barrel, right? The initial reaction on oil. So we are watching out for this possibility for the start of the week, $95 per barrel, right? And then if you have a look at GBP AUD, what on the monthly? Well, GBP AUD on the monthly is still on that 50, right? It's still bouncing from that 50, right? So this whole area, obviously the monthly candle takes time. It takes the whole month to form. So while the lower time frames candles are busy going up and down, the monthly candle will be a lot more stable, right? But we're seeing a bit of rejection coming through on this 50 there. So what I would do is I would basically keep a watchful eye on this 50. And my initial thoughts and reaction would be we're going to start getting a bounce. So on the lower time frames, I would focus on buying or looking for buys on the lower time frames, basing this on the 50 Fibonacci level from the monthly time frame. All right. And also looking at the possibilities of this creating another rejection here, which people may call it a double bottom, right? Which is, yeah, well, it's fair to say it's a double bottom, but I would base looking at this possible double rejection, looking at that strong 50, and also on the monthly time frame, I would start leaning more towards buys on the lower time frames. All right, that's how I would look at GBP AUD. But you see now, obviously, this is going to take a while to develop. But if now this gives us a higher low here, and then GBP AUD does this, it has the potential to go back to this high. You see that? It has the potential to go back to that high there, right? I'm not saying it's going to happen, but what I'm saying is this is a possibility, right? But we just have to follow it every week, every month. So ladies and gentlemen, that's basically how things are looking. Let's look forward to a great week ahead. Hope you guys enjoyed. Hope you guys learned. And we will catch you guys on the next one. All right. Have a good one. Enjoy and cheers.